Good evening, everybody. This is Pranav Rao from Smartkarma's research team. I'm pleased to introduce Zhen Zhou Toh, a partner analyst at independent research provider Aequitas Research. Zhen Zhou looks at Asian IPOs and placements and has covered several Chinese online education companies in the US and Hong Kong, including Sunland Education and Koolearn. Zhen Zhou, over to you for your presentation.
Hi. So thank you for inviting me, Pranav, to this conference. So today I'm going to talk about GSX Tech Edu. And before I go into that, I guess it would be appropriate for me to kind of just introduce us. Well, of course, Pranav has done that already, but we are 4 research analysts based in Singapore and Shanghai. We started within Smartkarma and we spun out in 2018. We focus on everything Asia IPO research from deal size of more than $100 million and above. And we look at it from a fundamental perspective and we overlay that with a quantitative framework. So our coverage research goes from pre-IPO to the IPO book launch, as well as the follow-up analysis on trading, as well as lockup expiry and sometimes beyond that. And GSX is one of those companies that has followed me through from pre-IPO all the way to full on and until now. So just kind of give everyone a little bit more context on the company, because I mean, I'm sure most people will have heard of the company and seen what has actually happened around the company. But I've covered the company since the IPO when they were doing their book build and when they filed their prospectus with SEC. And when the book build was launched, as well as the trading update. The company came out with a following offering in December of last year, and thereafter there was short sale reports recently. So just to give a bit more context on the company and what the company has been doing, the company was founded in 2014 by Larry Chen Xiangdong. The company used to run kind of a membership-based marketplace business model, and they collect the fee for connecting teachers to students. That was in about 2017 before they pivoted away from the marketplace model to the live large classroom format model. And as you can see, after the pivot, from the quarterly revenue just before 2019, the revenue just sort of took off. And the company turned profitable as of quarter Q4 2018. So, I mean, it's just proven that the company has really done well by pivoting away from the marketplace model to this large live classroom format model. So after the IPO, I mean, during the IPO, when the company was doing its book build, it wasn't actually it was priced at the midpoint of the IPO price range, unlike, I mean, some of the recent IPOs that have come up that was much more exciting. And I think that was one of the reasons for such a muted performance for the company was that there were other China online education companies that got listed. It was LAIX, Bingo Champ actually, and as well as Sunland Tech Education. So these two companies, they are online tech education companies, but they're not exactly the same because GSX focus on K-12 segment, whereas Sunland Tech Education was more focused on professional courses, which didn't really have as good a growth as GSX. Because I mean, just to give a quick background, because in China, people are more concerned about their gaokao. So parents are more willing to spend a lot more money to get their kids to go through their education in the K-12. So K-12 naturally was one of the faster growing segments within the online education segment. So sentiment really improved after that. After Q2 sort of when the share price moved up to about 15, and the company launched a follow-on offering in December 2019. There wasn't a lot of information on the follow-on offering, as we have covered on Smartkarma, but as we understand from channel checks, it was more of a refresh of the investor base. Basically, people from before just wanted to sell out, and new investors were coming in. And after that, sentiment really improved because the company had a very, very good Q3 and Q4 earnings results. So the share price rallied from about 10 to all-time high about 40 plus, and revenue was up by 5x year on year in 2019. Quarter on quarter revenue growth accelerated in Q3. So that was kind of an interesting thing for us because Q1 and Q2 revenue was actually slowing down, and Q3 and Q4 revenue growth picked up again. Paid course enrollment was up 207% year on year, and obviously in the last, at the start of this year, a big tailwind for the company was the virus outbreak, where people just adopt more online learning, and GSX was in the right place at the right time to capture this growth, and because of the share price growth and because of how well they have done in terms of the quarterly revenue, I think it attracted a lot of attention to the company, and that also drew a lot of attention as to whether their numbers were real. And so then came the first short sale report in February 2020, 25th of February by Grizzly Reports. This was a report where the company claimed that GSX was doing brushing of student counts, basically inflating the number of student enrollment that they have on their live sessions. Then they used that and then they backed it up with web traffic analysis, with such that GSX reported students that do not actually exist. These were among the important things, of course, that Grizzly Reports have claimed, but the share price didn't really do much after the Grizzly Reports were released, and the company actually also didn't do much after. But that was, and between February to about April, that was the Luckin Coffee scandal that happened, and it was also just before Citron Research published their report on the short sale as well. But during that period of time, because of the Luckin scandal, the company actually held an investor conference to kind of address the doubts that the companies have, that investors have, and all in all, within the conference was pretty much, the company had pretty much provided a very logical explanation to all the data that has been used against in the short sale report. So in April, Citron also published a report claiming that 70% of the revenue was fabricated. The company was, Citron was basically saying that most of the students are not actually in the lower tier cities, and that in fact a lot of people in the tier 1 and tier 2 cities have not actually heard of them. And Citron actually provided quite a bit of evidences claiming from the surveys that GSX was not part of a lot of these surveys. And there were also WeChat accounts that were supposedly linked with GSX, but were not registered with GSX entities. But all in all, when you look at Citron's research, they were pretty much similar to what Grizzly Reports have already said before. So the impact at that point in time was not as, it didn't achieve the kind of impact that one would actually expect from a short sale report. And that was actually what I thought was probably the end of all the short sale reports after Citron Research published all of their reports. But then, yes, just 2 days ago, Muddy Waters also came out with a short sale report claiming that GSX is a near total fraud, with 70% of the users are being fake. And it concluded that this was based on actually GSX data files that you can find on the GSX live classroom sessions after they've ended. And they also corroborated with ex-GSX manager to shed some light on how the bot operation has been doing. So all these were just coming up here and over the span of the past few months. And one of the things that also kind of exacerbated or exacerbated the situation was that TAL Education was actually admitted that they had some inflated sales at one of their online education subsidiary, which also kind of made the whole situation worse, because then people were thinking whether GSX was actually also doing it as well. So all in all, when we look at our understanding of all this, when you look at all these short seller reports, is that there was one consistent argument that short sellers were all using was that they were claiming that the company was brushing, and that they were using it to inflate their operating numbers and revenue. And out of all this, Muddy Waters one was the most compelling because they were not using just third-party data sources. They were actually giving a clear explanation of how they got the source of data and what the methodology. But the problem with online data that is collected and all this is that the only people who know that that these are fraudulent numbers the company itself. And if no matter how you try to look at the company from a outside point of view, outside perspective, if the company can provide with a logical explanation of why there was a bot-like activity, and this is regarding Muddy Waters' claim, there isn't really any chance that anyone can prove that the company is doing something wrong unless the company actually, admits it themselves. And so when you look at the scenario analysis and you try to think about how actually one should approach GSX as a company, as an investment, you'll see that from the behavior of the people who are involved in the company, from the investor relations to Larry Chen to the CFO, they're all very defensive about the reports that were put out by the short sellers. So the one thing so let's assume that the short sellers were right and that the company was a fraud. If that was true, the fraudulent activity would have been very, very pervasive throughout the entire organization. And for such a fraudulent activity to happen on such a massive scale, it would not just be by a single person, like, for example, Luckin Coffee, who's done by one person and a team, but rather the whole team would have been on board with the fraudulent activity that they were on. So when we look at the scenario as it itself, we don't think that GSX would eventually give up and admit their wrongdoing, which is what happened to Luckin and caused the whole share price collapse. Nor will it be like Tao, where they admitted because it was just a small part of their business. GSX pretty much have all their business on K-12. So we think that in terms of how we look at this, the company will definitely not admit any wrongdoing at this point. And if the way that it will end likely for the company is that you will be forced to delist, or you just continue to trade as is. And of course, this would have to be triggered by either SEC probing into GSX or China regulators, CSRC, or whichever, going to investigate into GSX. And I think based on the past example, which is the most recent, the agencies have been mostly more reactionary because I think they do not. It's from an SEC point of view, it's pretty hard for them to tell whether to tell whether there would be a fraud because the company is just operating in China. How would they be able to go about with the investigation? So because of that, we think that the likelihood of how this ends would either become such that company will be forced to delist, or you would just continue to trade as it is. But because of what has happened last night, Luckin was actually asked to delist by NASDAQ. So we won't rule that out, as it would definitely be a very it would definitely be something that is very that would potentially happen to the company because there was just so much noise around the online tech education company of GSX, and people would definitely be trying to ask what exactly is SEC trying to do. So, but overall, when you look at the peer valuation of how GSX has been trading against online tech education peers, there really isn't much. There really isn't many peers that you can use to benchmark the company, and the only one that would be most comparable would be Kulin, which also listed about the same time last year, I think slightly earlier than GSX, and it was listed in Hong Kong, and it's trading at a much more expensive EV revenue. But if you look at the segment revenue breakdown, K-12 is one of the is the second biggest segment in the whole, contributing to the overall revenue of Koolearn, and they are trying to grow that business very quickly. You are also seeing similar kind of growth rates for Koolearn in that aspect. So if everything were to blow over, we reckon that GSX will probably be able to trade at a much higher revenue, EV revenue, compared to Koolearn, at least higher up from where it is now. But the problem with that is that there's no positive catalyst for GSX for any multiple expansion to trade closer to Koolearn, and that is the problem therein with going long on GSX. There is just a huge potential downside if there is going to be any regulators probing into the company, but there is just no positive catalyst for the company for multiple expansion to trade closer to Koolearn. So I think one of the way to structure this is really to go long on GSX and protect the downside with short-dated puts. Of course, the puts are not expensive at this, not cheap at this moment, but this is kind of the way to structure it around GSX, because we think that if the numbers are real, they shouldn't be trading at this kind of multiple, and the revenue growth shouldn't. The growth in revenue is just much faster than Koolearn. So yeah, so I think these are kind of our thoughts on GSX and what has happened with the company throughout the past few weeks. I'm happy to answer any questions that anyone
Thanks
has.
for that, Zhen Zhou. I've got a couple of questions come through. Let's get to them. I think the first question is kind of trying to get a sense in greater detail on what the muddy waters argument is regarding student numbers being inflated using bots. Could you just shine a little bit more of a light on that?
Right. So Muddy Waters was claiming that GSX was using bots to kind of increase the number of student counts, and the way that they were looking at it is that there were a lot of accounts that were logged in coming in at the same time, joining a session or a live classroom format at the same time, and they were claiming that these are sort of called joiners, and they were saying that these are the ones that are they look more like a bot. But the CFO have actually explained why this was the case, because of the format. This was structured because of the format of the classrooms, because a lot of students were actually having classes before the live session that was going to happen, say half an hour before, so that they were actually doing some sort of games and quizzes before. And this was not something that was just spun out of nowhere because of the Muddy Waters claim, but it was actually something that was mentioned already in the prospectus. If you look back at when they first filed with SEC, they were actually mentioning that such a format exists, and it's not uncommon for people to have that kind of for those kind of format in China, because a lot of students actually are very used to after and before school tutorials. So this format is not entirely. We think that the explanation by CFO made a lot of sense in terms of why some of the IPs are having the same IP numbers, and then why they were joining at the same time. That was one of the key arguments that Muddy Waters have. And along with the company also posted their official response, but in Chinese yesterday in the morning, also using the same explanation basically from the CFO, explaining why this was happening.
Understood. Thank you. The one thing that's probably been most interesting with GSX is right before they listed, they had a change in the model, their business model, moving from a marketplace to the online live classroom format.
Yeah.
Is there any precedent or comparable to that format, and kind of to get a sense for how those user numbers and revenue numbers actually stack up? Is there a peer of any shape or form that is similar?
You mean before the marketplace?
So my question is basically, are there peers that adopt the marketplace format, and are there peers that have the live online format as well?
Right. So for the marketplace model, from what I've seen from Sunlands Tech Education, from LAIX, which kind of is not exactly an online education company, but they don't really do the same thing as there isn't any marketplace model that was that we have seen before. So the only kind of the business model that really existed was the live large classroom format kind of model that GSX has. But even then, the peers are not doing it in the similar way. So look at Sunlands Education. They're doing it in a more like a smaller group kind of tutorial kind of session, but mainly because there was they are doing more of professional online courses. So it's more like a few students to one teacher kind of format. So no one has really been doing what GSX has been doing in terms of having a lot of students to one teacher, and which is also why they explain that they had such a high revenue per instructor kind of numbers. So, and also if you look at Kulen, they were also doing the similar. They were also doing in similar format as Sunlands Tech Education. So they don't really exactly have those kind of large class format kind of business model.
Understood. Just a quick question on who the largest shareholders are. I know that there was a claim in the Muddy Waters report that the chairman's pledged $300 odd million worth of shares.
Yeah.
Do we know who the other large holders are, and have they made any sort of comments in terms of their support or further questioning to the company?
For the large shareholders, no, there wasn't. Let me just look at. No, actually, most of the people. Sorry, so the question was whether any of the investors were asking.
Twofold question: Is there are there large shareholders of any significance apart from the chairman? And if there are there any sort of comments or questions that they've raised as of now? Because if memory serves me right, there was a short sell attack on GDS, which is another Chinese ADR, and we had one of the large holders, which I think was either Temasek or GIC, that came in with a statement in support of them. So I'm just trying to figure out if there's been any of that yet in this situation.
No, so far there wasn't any, as far as I know, there wasn't any large shareholders that came in and say that the business was sound. But I guess a lot of people were actually dialed into the investor conference, as we understand, and they were asking a lot more on how the company has been doing and how the company would have addressed the doubts that were put out by the short seller reports. So I think that was kind of an equivalent of how they responded to the seller coming in with and just killing all the doubts of what Grizzly Reports have said. But in terms of the Muddy Waters short sellers, the claims in the short selling report, the company already put out the press release for that. So, and I think most of the reaction was that these are all claims that were similar to before. So then there isn't exactly anything new that would really be very damning for the company.
Okay. Got a couple more questions here. I'm going to read one question verbatim. Your long stock plus long put is effectively to protect downside.
Yeah.
Are you still bullish on the company, having covered it since its inception?
Yes, because I mean, this is mainly because of how they've demonstrated the growth and quarterly revenue. So in Q1, so what we have initially thought about the company was that, like any other Chinese companies, that when they first come onto market, they will grow really fast. They will show these numbers, and then it will start trading really well. Q1, Q2 of 2019 was starting to slow down. So we kind of modeled that in for the rest of the next year. But in Q3 and Q4, the company really showed quarterly revenue just starting to pick up, and that was just slightly even before the virus outbreak happened. So in terms of fundamentals, just looking at numbers, assuming that giving the benefit of the other companies having real numbers, definitely this should trade at least in line with where Kulen is trading, which is 2020 would be about 9 times EV revenue. So yes, I think so yes, still bullish on the company, and I think it will still continue to do well if all these doubts were to go away and the regulators just leave them alone.
Okay. There's another question here regarding operating metrics. Do you know how GSX's student retention rate and any other operating metrics kind of line up versus the likes of Coolon?
So retention rate was something that was not given in the prospectus. I don't think they actually give it out after that. But the one thing that was how GSX has stacked up against competitors is in terms of the average revenue per enrollment, and that was one of the key metrics that we were looking at. So Coolon's average revenue per enrollment was about, as per what we calculated, was back in 2018 was about 700, and GSX was about 1,000. And that was just the overall average revenue per enrollment. But right now, GSX had made very good headway in terms of the average revenue per K-12 paid course enrollment, which is about 1,700 per enrollment. So in terms of that, they have been doing much better than Coolon. And I think that actually stemmed from GSX being the first mover, and GSX being the first mover, and Coolon being kind of the second and slower to react, because they had these big professional courses, which is similar to Sunland Education, which was a big part of their business. And then they suddenly the model, one of the segment that is growing much faster. So they started to enter it in about 2018, when they started to really try to grow that business. So average revenue per enrollment is something that I've looked at, and GSX is just way better than what the Coolon has done before.
Understood. Very quickly, so if you were to kind of not take the short put strategy, long put strategy, would you want to hedge this position with a short against a basket or any other particular company, or do you think that the strategy works best with long stock, long puts? Yeah.
I think the strategy works best with long stock, long puts, because another scenario, of course, is that if GSX is a fraud and there was a regulatory probe, I think the only other online education company that you could actually invest in would be Coolon. And Coolon has Tencent. I mean, after all, it has Tencent and New Orient as one of their major shareholders. So that would be kind of sort of a flight to safety. So then Coolon would be the natural alternative choice for the idea like this. So you wouldn't want to be short you wouldn't be short Coolon as well, because Coolon is just such a good quality name with a good backing by big companies. So
in that you're paying the premium for that.
Yes, exactly.
Okay.
The quality in terms of shareholders and all that.
Understood. Thank you for that presentation and taking those questions easy. I think we're coming up on time. This is definitely a very interesting situation, and I'm sure we're all going to be keeping our eyes on it. Yeah. Do keep us informed on how your views change, if at all.
Sure.
Great. Thank you.
Thank you, Pranav.